Welcome back to Market on Close. Let's continue our discussion about the big story of the day. That is the breakout to all-time highs in gold and now about a 9-month breakout of the range in Bitcoin. Scott Bauer is the CEO of Prosper Trading Academy, here with us, a trader and observer of both these asset classes from time to time. Where do you sit right now, Scott?
Wow, that's a loaded question. Long-term bullish still on silver and gold. Short-term, and I mean very short-term, I am actually bearish, and we'll discuss in a moment a put spread that I bought today. I just think it's gotten a little ahead of itself, a little over exuberance here. And you know, Oliver, when you start hearing Uber drivers, the cash register person at the grocery store, and everybody asking about, is it time to buy gold? Or what's going on with gold? And you see something like that, you know, that's usually an indication, seriously, of sentiment out there that it could be an overbought, oversold condition. So for no other reason than I think that gold has just moved way too far, too fast, based on what the dollar is doing, I'm buying a very short-term put spread. Longer term, I'm bullish.
I love it.
About Bitcoin.
I love it, Scott. This is just a good old-fashioned. I mean, this is the best way possible, firing from the hip, just saying, hey, the thing's gone too far. I'm looking around, seeing the sentiment turn too bullish, right? I mean, for gold, that's just kind of what it is. It's never really clear what the catalyst is for it. It's not like something changed, you know, overnight in a big way. Not that I see.
No, I totally agree with that. And the reason I'm longer term bullish on it, even with this massive run up, is because the third quarter and going into the fourth quarter here, especially with the election, there's so much uncertainty left in these markets that even if the equity markets continue to grind higher, I see an absolute path that both gold and equity markets can continue on the same trajectory upward.
And that's what they've been doing. That's what's so interesting about it, is now the debate over whether or not that correlation changes, right? I mean, over the last couple of weeks, we saw the NASDAQ kind of lose some of its luster, potential for this value rotation, small cap, all that stuff. So, Scott, are we getting to a point in the market where the relationships that we've gotten used to watching are not going to hold up as well? I mean, I know your point here is that the stock and gold relationship can hold up, but what really needs for that? What needs to happen for that to continue? I mean, that seems to be more like an effective policy, right, where the Fed comes and dumps a bunch of money and everybody just goes, buy everything again.
Yeah, I think what this is really showing, and obviously it's so closely tied to the drop in the dollar that we've seen, is once the dollar starts to stabilize, and I think that not only happens, but I think that the catalyst for that is the reopening again. If things start to get better, people are going to feel more comfortable about going to the U.S. dollar. Why did we see the dollar so strong over the last 9 months or so? It's because that was considered the safe haven trade out there. And I don't think it's you know, a coincidence that we've seen that sell-off, massive sell-off in the dollar kind of go hand in hand with the halting of the reopening and the pulling back of what we've been doing. So hopefully sooner rather than later, for a lot of reasons, we see things start to get better, start to reopen, dollar stabilizes, which I think is going to go hand in hand with that. And that may buck the trend a little bit of gold here. But again, so much risk on the table between risk headlines, the election going into the end of the year here, so many tailwinds for gold.
So basically, we're kind of coming back to this, magic situation for gold, where the bad stuff is good for it, and the good stuff is kind of good for it, right? And as ridiculous as it may seem, that's been the story here. It's hard to argue against the chart for the past year as it continues to run. What about Bitcoin?
So, you could talk about fundamental, technical, analytical on this one. A few weeks ago, Oliver, we had the discussion about how volatility in Bitcoin was about as low as it had been in 3 years. And we talked about how that was setting up for a move. Whether that move was higher or lower, was determined to see. But a big volatile move. And sure enough, we got that. And what happened yesterday and into today, this massive move to the upside, is once Bitcoin crossed 10,000 and then 10.2, at 10.2, there was about $74 million worth of shorts that exited the marketplace, that basically, threw in the towel, gave in. So we are seeing this rise up here for a couple of reasons. A, the shorts gave up. $74 million worth of shorts liquidated last night. Also, you're starting to see the altcoins, which had performed a little bit better than Bitcoin over the last few weeks and months, people starting selling out of those to buy Bitcoin. Now, look at the volume today. CME futures today, all over 25,000 contracts today. That is the biggest we have seen in months. So a lot of bulls out there and bullish analysts out there are now saying the next stop for Bitcoin, 15,000.
Oh, yeah.
I'm not that bullish.
Heard that story before.
I'm not buying into that yet. However, any way you want to look at it, the charts were setting up for a big volatile move, and this time it just happened to be to the upside.
Yeah, I think it's a really good point. I will say that the chart was lined up for a big move. We've been making the series. We talked about it here, on the show last week. It was odd that the whole story that the Bitcoiners say, whether you believe it or not, what it's going to mean for Bitcoin, their story is more compelling than it's been. It was odd that the thing was silent. So now we break to the upside. The 15,000 you hear from the Bitcoin bulls. Let's get to maybe 12,000 first. That would be the next stop to get back to where we were in August. Now, you're more trading gold though, right, Scott? Because I know you got to trade just real quickly back to GLD. I know we're kind of bouncing around, but you're not trading Bitcoin.
That's all right.
Yet.
I am not shorting Bitcoin, no. Gold, though, in the GLD ETF, I'm buying the August 7th, so next week's 179, 175 put spread. You can do that for $1. Again, the only reason I'm doing that is sentiment. I think it's run too far, too fast. On any pullback, I think it's a buy. I'm looking for this thing to pull back. Great reward to risk on this put spread. And if I'm wrong, I'm completely risk, defined, completely hedged in. I'm only paying $1 for this.
Okay. 179, 175 put spread costs you $1, costs you nothing to hear Scott Bauer here on the TD Ameritrade Network, bringing us some fire. Appreciate it, Scott. Thanks for joining. CEO of Prosper Trading Academy. When we come back,